Good morning, it's Friday the 5th of May. This is the Phoenix Blue Update brought to you by Tom Colley. We've had a very interesting week, if not the easiest week to trade. We've seen a distinct difference between commodity currencies and the other majors and minors. The commodity currencies, we've seen some big moves on. The others have been very, very much range bound following the bank holiday at the weekend, low liquidity, and ahead of today's non-farm payroll. We have had markets really just sitting and waiting. Yesterday afternoon we had the news through that Donald Trump's administration had managed to pass a revised healthcare bill, which he calls the repeal of Obamacare, through the House of Representatives. However, he only managed to squeeze it through by a 2-vote margin. He had 20 of his own Republican Party voting against it, and all the Democrats. The markets appear to have taken that in a somewhat negative way. They see it as a problem going forward to get the vote subsequently through the Senate, and maybe more significantly in the medium term, that the vote could lead to the Republicans losing their majority in the House of Representatives in the 2018 election, which would make it very difficult, if not impossible, for Trump to get through any of his policies after that point. Other things to bear in mind this weekend: we've got the second round of the French election. Macron is leading by 20 percentage points in the polls, so the market should really have that priced in. We are cautious. We've had Brexit and we've had Trump in the States. The surprise is there that this would be an even much bigger surprise. To turn around that poll 20% lead would be a major surprise. Macron also was seen as the winner of a head-to-head live TV debate with Le Pen earlier in the week, and Le Pen has had her own difficulties this week, so it would be a much bigger surprise than those two other events if that was to change. However, we are here at Phoenix Blue, we'll have all our trades closed over the weekend. We won't take the risk of market gaps, even if the certainty or the near certainty that it appears of a Macron win happens. We still will have a risk on gaps, potentially in a different direction. Okay, the news yesterday and today. Yesterday we had services PMI out on the pound, which were positive. We had trade balance on CAD, which came in below expectation, and unemployment claims on the weekly figure out of the States coming in positively below expectation. We had a couple of central bank speeches. We had Draghi saying that the EU needed closer integration in order to retain its status politically and economically in the world. Polos, the Canadian governor, he said that import tariffs imposed by the US would in the longer term hurt the US economy more than it hurt the Canadian economy. On to today, we've got the Japanese bank holiday still happening. Nothing much came out of the RBA monetary policy statement that we weren't expecting. On the Kiwi, we had inflation expectations coming in ahead of the previous figures, so that would be a positive. We'll see that reflected in the charts shortly. And then we've got the big one for today, which is non-farm payroll. We've also got the Canadian employment change and unemployment rate, but they tend to get lost on this big, most significant data point of the month. And we had a real disappointing figure last month against expectation. So we'll be watching this even more closely. The markets will be watching it. As I've already mentioned, there's a lot of markets at very key levels waiting for this figure. What we've also learned to watch is to watch for revisions on last month's figure with more updated data. So potentially last month's figure could be improved or made worse by more up-to-date data. So taking that into account along with today's figure relative to the forecast can also build an overall picture, as can data out on average hourly earnings and the unemployment rate. So the headline rate is the non-farm employment change. The initial volatility tends to be on that, but further through the day we'll see these other elements play out. We then have Fed Chair Yellen speaking at 6:30 UK time. I don't believe anything will come out that. It's a conference specifically about women in business, so I think her speech will be tailored to that rather than being general in terms of the markets and the economy. And obviously I've highlighted the French presidential election on Sunday, which if that goes according to the polls, we should have pretty early certainty on that if we get exit polls or data released. I think instead of having exit polls, the French government actually release staged data, so they will say after the first 5% of votes have been counted, 10%, etc., etc. We should very quickly get a picture of if that is going to play out as is anticipated. Okay, over to the charts. We had a big sell-off on the dollar here. This is the dollar index. A combination of factors. We've got we saw strength in the euro. We also had the healthcare bill from Donald Trump that he managed to squeeze through the House of Representatives, that I've already mentioned. That wasn't overly well received by the markets for the reasons that I've already mentioned, but here we are sitting at a key level with a commitment of traders extreme long signal here. We've already broken below this significant trend line through here. If we do get a break to the downside now, that will medium term will break our dollar strength bias for certainly for the next few months until we get back above these levels and really back above the $100 level, if that's to happen in that sort of time frame. Over on the yen touched 113 yesterday in confluence with this downward trend line, the top side of this very accurate channel here. Clearly a key level. It's been rejected. We've seen correlation with the Nikkei that we expect and look for. The Nikkei touched this high through here, which has been a significant level for a long period of time. We've been waiting to see a break of that level right all the period through here. We were waiting for that break. It hasn't happened yet. We've had a major pullback. Now we're back up here and we're back at that level, and we should see a breakout in the near future, particularly if we get strong NFP figures today. And obviously we'll see the same here on the yen. Our bias remains to the long side here on the yen, but I do think that the picture could change quite dramatically one way or the other, dependent on that non-farm data today. It does feel very set up in that respect. Similarly, here's the move on the euro we got through yesterday. Potentially the institutions moving price to a key level ahead of the decision. We've got a level here at 1098. Again, another channel through here. These highs have all been met or with commitments of traders extremes. We have another one here. So again, we have our dollar strength bias to the short side. If that level's taken out, that becomes an ignored COT signal, and we'll be looking for a move long, a minimum to this next key level through here at 111.30-ish. If we retain the commitment of traders short signal, we'll then our bias will return to the short side unless that signal is ignored. But in the meantime, any breakthrough here, we'll look to trade euro strength to that point. If the market turns and the commercials in the commitment of traders report turn their positions and we no longer have a COT extreme, clearly we'll have an even longer term bias to the long side there. Over on the pound, this is the weekly chart, and we're at a very, very interesting level at the moment. This is a falling wedge that was created ahead of the Brexit vote last June. Here is the vote itself. We got a move to the long side as we were anticipating a Remain vote. We then got a massive move to the downside as we got the vote to leave. On the actual day of the or following that result, we got price pulled back to this level through here that's formed the bottom of this falling wedge, and now forms a very nice trend line for us through there, and price has been sitting in this area for the last 2 weeks, and it'll be very interesting to see if we get a break above that level, because that could be a reflection that the markets are seeing that Brexit is going to be less negative than maybe they have been perceiving it. We will wait to see, but there's clearly a very significant level, so that's another market sitting at a level where potentially today's non-farm payroll could be decisive. Here's the Aussie, and we've had a big fall in the Aussie over the last 2 to 3 days. Some of the Phoenix Blue traders intraday trading actually got into this trade and made some lovely profits through there, with at least 1 trade, 2 trades, 3 trades in some instances, and still holding those trades, and I'm sure they'll hold them into late morning ahead of non-farm payrolls before closing out those trades for a maximum level of profit. This was a somewhat unexpected move. The unexpected element of it was the long move through the back end of last week. That was potentially lack of liquidity in the markets due to Monday's bank holiday. The institutions pushed price up relatively easily against little downward pressure, and then having reached a level at a better price, they've simply sold at a better price to benefit to a greater extent. We didn't get an opportunity because of the bank holiday to get into that move on an end of day basis, but we do see more downside in this market. Conversely, we don't see downside in the Kiwi. The reason being, we've got commitments of traders long extreme signal here. We appear to have created a double bottom here. We've got a nice low test bar off this zone, through this support zone through here, and we'll, going into next week, be looking to the long side in this market unless non-farm payroll changes that position. Clearly we're not trading this end of day picture at the moment because of non-farm. Over on the Canadian dollar, well, this is one of the commodity currencies like the Aussie that we've spoken about. We've had a big bullish move here as the price of crude has dropped significantly. We've broken a commitment of traders extreme. That becomes an ignored signal. After that point, we then reverse our bias through until we have a commitment of traders signal at the next significant level. So between this level and this level, our bias switched to long despite the COT extreme, because we only look for the COT extreme in conjunction with a very significant level. We haven't had an opportunity, a clean opportunity to be fair, either end of day or intraday to get long this market. We will be looking to see what happens today and see what happens at this key level, and we'll also have updated commitment of traders data over the weekend. Finally, crude oil. I've already mentioned crude sold off. It's sold off very strongly. OPEC are negotiating between themselves about extending their current production cap. However, the market appears to believe that OPEC's power is now much more limited than it has been previously. They believe that the shale mining crude from the States is actually what is in control of the markets, because that can switch on and switch off in a way that OPEC can't to increase demand. So we've clearly seen a very big sell-off here. We've been above this trend line for a long period of time, and we were ranging through here through the first two, 3 months of the year. We've then seen more volatility, and we've now seen we're again another market down at a key level. This 43.50 on this chart at the moment. It does depend with crude on your broker. You may see it at other levels or other numbers, but the structure of the market remains the same. So it'll be interesting to see what the market does here. We will be looking for further downside potentially. If price pulls back to this level, clearly a break below that's going to be very, very significant. Okay, so that's it today ahead of non-farm payroll. Reminder that the next free live trading event is Tuesday the 9th of May. You can get joining instructions direct from eventbrite.co.uk, or if you go through the contacts page of our website, you can sign up for this event, which is Tuesday afternoon. So if you are interested in that, it's Friday, really time to move, your last opportunity to get registered for that event ahead of next week. Okay guys, have a great weekend and we'll speak to you next week. Take care. Goodbye.